Business owners, if you are tired of writing massive checks to the IRS every single year, there is a way to drastically lower your taxable income while creating a guaranteed retirement income for yourself. Hey guys, it's Chris from the Hidden Reserve, and in today's video, I'm going to be talking about how to turn business profits into guaranteed retirement income. And the first thing I want to dive into is the problem. Profits gets taxed, spent, or lost. And there's three main things that most business owners do. Number one, reinvest the profits back in the business. Nothing wrong with that. Number two is park that excess money in the bank. And number three, pay a large chunk of that over to the IRS and taxes. Those are the three main things that all of us business owners do. And there's something lacking, which is prioritizing retirement. And I completely get it. Like, a lot of us spend a lot of time in our businesses grinding, building it up to where it's at, and we completely neglected our own retirement, and maybe it wasn't even a thought, but that's the problem. We can't just let our retirement slip away, especially if we spent years and years in our business building it to the point that it's at. And the issue with the three things I just talked about too is, money in the market, there's a lot of risk to that. Nothing wrong with that, but you just have to be aware of the risk that you're taking. Number two, the money in the bank just sitting there, you're not going to get much on it. You might be getting 0.01% in a standard checking or savings account. High yield savings account, you might be getting a bit more, but again, it's getting eaten away due to inflation. And number three, obviously money to the IRS. That's just money that's completely gone that we don't have anymore. So we need to solve here, okay, where can we reposition some of these dollars that we are sending over to the IRS? Where can we reposition them to benefit ourselves more as a business owner? Point number two, the solution to that right there, and that's converting a portion of your profits over to your own private pension. So this is very powerful. It's not really talked about. It's buried inside of the US tax code, but there is a part of the tax code that is specifically for small business owners and pension plans, and it's defined benefit plans such as cash balance plans or 412(b)(3) plans. And with these plans, you're able to create your own pension. And with these pension plans, the way that they're funded is using pre-tax business profits. Okay, so this is very, very powerful. And I'm going to dive into this more later in the video, but I'm going to touch on it now. If you're making significant profit in your business and you're behind in retirement, you want to catch up in retirement, this is such a powerful strategy, because instead of sending those dollars off to the IRS in the form of taxes, you can redirect a portion of those tax dollars into your own guaranteed pension plan or guaranteed retirement plan. And I'm going to dive into that more in the video. But in simple terms, you can take a chunk of your profit, put it into one of these plans, you get a massive tax deduction today, okay? That's very powerful, a massive tax deduction today, and then in turn, you're building a guaranteed retirement plan for yourself later down the road. So very, very powerful. You're getting a tax deduction, saving tens, maybe hundreds of thousands of dollars this year, and instead of sending that money off to the IRS, you're sending it up to your own pension plan that you're creating for yourself, okay? So point number three, what makes all of this guaranteed? I've been saying that throughout the video so far, guaranteed, guaranteed, guaranteed. It's because it's using insurance contracts. So these plans are not tied to the market. Cash balance plans, you can have money elected to the market, but what we're focusing on is not tying anything to the stock market. It's all using insurance-based contracts because we want the guarantees, we want the predictability, and we want the certainty in our retirement income. So where the guarantees are coming from are either annuities or whole life insurance or a mixture of the two. With these plans, you can either do all annuity, so you can have all of those contributions just going to annuities, or you can do a mixture where it's half and half. Commonly, you'll see about a 40-60 split, so like 60% of the contribution would be used to fund the annuity portion, and then the remaining 40% would be used to fund a whole life insurance policy. Now, the two things in common with the whole life and an annuity is they're both guaranteed. They have built-in guarantees, and that's what allows us to see exactly how much you're going to have in retirement income when you go to retire. Because if you're getting a fixed rate of 3%, let's say, you're able, and you're funding it a certain amount each year, you're able to extrapolate out and see exactly how much money you're going to have in retirement, which is very important. And that's the power of doing this strategy, is we don't want the stock market volatility. This isn't meant to compete with other, or replace rather, other investment accounts you have either. You may have, 401k, profit sharing plan, traditional IRAs, whatever it might be. That's fine, that's great, but this is a way to lower your business taxes, right? And then use those dollars to fund a guaranteed retirement plan that's not tied to the stock market. So you're diversifying your retirement and also saving a lot on taxes this year and following years to come, okay? So that's essentially how these plans are designed. It's using insurance-based contracts that have guarantees built in, okay? Point number 4, and I already touched on this, but I'm going to emphasize it some more. You're paying yourself instead of the IRS. So instead of sending over, tax dollars to the IRS, you can redirect a portion of those to fund your own retirement plan. Okay, and section 412E3 in the tax code, if you want to dive into that more, is what we're referring to here. So it's in the tax code, it's buried in there, it's not really mentioned by CPAs or a lot of people. And to be very clear, this type of strategy does not make sense for most people. It's a very, I like to view it as a niche strategy. It's very powerful for the right individual, but it's not for everyone, okay? I want to make that very clear. So that's the thing, is you get the tax deduction today in your business, and then you have those dollars flowing over to your guaranteed retirement plan. And then I'm just looking at my notes here. I want to make sure I covered everything here. And something important to know, just like your 401k, other traditional retirement accounts, the money inside of these plans is going to grow tax deferred. Okay, so you're getting the tax deduction today just like you would a 401k, but then when you actually go to retirement and you start withdrawing money from these plans, you're going to have to pay tax at that point in time. So that is a drawback to doing this, is the gamble of where our tax is going to be in the future. They're going to be higher or lower. My personal opinion, I think taxes are going to be higher. Look at the state of the economy, or look at the state of the United States rather. We have trillions and trillions of dollars in debt. My bet is that taxes are going to continue to go up over time. But that is a drawback to these plans, is the fact that you have to pay taxes at the time of retirement, or when you start to draw from them. Point number 5 I want to cover is the legacy benefit. So if you have this plan set up to where you have a mixture of annuity and whole life insurance, with those whole life insurance plans, you're going to have a death benefit as well. So you build up your cash value, that's what you can draw from for retirement income, and then you have the death benefit. And that's going to pay, when you pass away, that's going to pay out to your beneficiaries income tax free. So you're building a legacy, a tax-free legacy that is, using pre-tax dollars. So that's very powerful. And this is one other thing to note. This is one of the only ways to fund life insurance with pre-tax dollars. Almost every single scenario, when you go to fund cash value life insurance, it has to be after-tax dollars. But this is actually a way where you can use pre-tax dollars to fund life insurance and deduct the full life insurance premium. Very powerful. Not a lot of people are aware that this is an option. So keep that in mind. But ultimately, with this, what I wanted to touch on is the legacy component. We can't forget that. It's very powerful. If you pass away prematurely, or even whenever you pass away, your family's going to get the death benefit income tax free from the whole life insurance policy. Very powerful. Point number 6 that I want to cover is just going through a real world example, just giving you an idea of how the numbers would work. Again, it's an example. These numbers are not going to be the same for you, but the point of this example is just to show you, and showcase rather, how this actually works. So let's say, and this is a simplified version of it, Let's say you got a 55-year-old business owner earning $900,000 a year in profit. Normally, assuming a 40% tax bracket, normally they'd be paying $360,000 a year in taxes on that 900 grand. So what this person's doing differently, instead of just paying the $360,000 in taxes on that, what they're gonna do is contribute $300,000 a year from that $900,000 in profit over to one of these plans that we've been talking about. So what that's gonna do is instantly lower the taxable income for that business owner by $120,000. Again, that's using approximately 40% taxes. So you contribute $300 to the plan. Now you're paying, or instead of paying $900,000 in taxes, or paying taxes on the full 900 grand, now you're only paying taxes on $600,000. So that's just an example there. And for this person too, the example, they're gonna fund this for 10 years, and at age 65, based on funding $300,000 a year, that's gonna create approximately $16,000 a month in guaranteed retirement income for the rest of their lives. And it's when I say rest of their lives, the money does not run out because it's funded with annuities and whole life insurance. The annuities will never run out of money. You'll get a paycheck for the rest of your life, and the whole life insurance policy is going to continue to grow at a guaranteed interest rate for the rest of your life as long as the policy's in force. And that's going to be approximately $200,000 a year in guaranteed retirement income. And over the 10 years at that $300,000 funding amount, this business owner would have deducted $3 million for the business and would have saved approximately $1.2 million in taxes. So instead of paying that money over to the IRS, this business owner chose to redirect that money over to this plan and ultimately saved a boatload of money in taxes and created a guaranteed pension plan for themselves. And then lastly, like I touched on, if this person were to pass away prematurely, then the family or the beneficiaries that he or she elected to this plan would get a income tax-free lump sum of money or a legacy. So just to recap everything, and I hope you guys are getting value from this video, just to recap what we covered in the video. Number one is you can redirect pre-tax business profits to guarantee a retirement income stream for yourself using either a cash balance plan or a 412(b)(3) plan. Okay. Next, we talked about you can get massive tax deductions now for your business. So again, you can, and it's different for everyone, but you could deduct up to $300,000-$400,000 in some cases from the top line of your business, save a bunch of money in taxes, and redirect that money to your retirement plan. Okay. Number three is creating a guaranteed income stream for your life, for life later in life. So again, you're using that pre-tax money to guarantee income, retirement income for yourself down the road. And then lastly, leaving a legacy to your family, your church, whoever you're deciding to leave that money to. So I hope you got value from this video, and I hope that you just see how you can maneuver your business profits differently, and especially if you're someone who's behind in retirement and you need a way to contribute more dollars towards retirement, because 401ks, profit sharing plans only allow you to, IRAs, SEPs only allow you to contribute a certain amount each year. If you're maxing those out and you need to be able to contribute more money towards retirement, this is a powerful strategy to be able to do that. But I hope this brought value to you. If you have any questions below, just leave them in the comments. And if you're new to my channel, subscribe, like. I'll put more content out like this out over time. And then lastly, if you want to actually see your own numbers and see if this makes sense for you, you can book a call with me in the link. The link will be in the description of the video. Again, hope you enjoyed. I will catch you in the next video.